Hi traders and welcome to Pepperstone's technical analysis wrap on Friday the 29th of May. So this week's been a fantastic week for all of the moves on the major pairs. We've had some really good breakouts of some key zones and we've been able to get some really nice moves out of support and resistance. So we'll jump straight into the charts and start looking for the next opportunities because there are some more presenting even on the bigger time frame. So we'll jump straight in and we'll have a look at the Aussie USD. The first one is an interesting one. You can see the last couple of days has been pulled up by the 200 moving average and this role reversal zone. So it was support, clear support over here on the daily chart. It was resistance over here. And now it's having a lot of difficulty breaking through with the 200 basically right in its face. So it's no real surprise to see it pull up here and take a bit of a breather. I'm not really sure. Look, it's not really giving us a lot of indication that it's going to turn around. Even by the MACD, you can see here that the MACD is still, technically not really falling. So the 12 and the 26 moving average is still, far enough apart. You can still see here that the 20 and the 50 are still accelerating away from each other. So it's not screaming sell, but it's certainly got a roadblock in front of it. So it's got a little bit of work to do before we start, getting excited about going along on the Aussie here. But what you want to be doing, first things first, the daily has to break this zone. So it has to get above at least the sort of, you'd have to go past 67. You need to close above 67 on a daily, that is, to convince me that this is going along. And if it does, it's certainly got a bit of room to move. It's got, the best part of 150 pips to move without too much trouble. So if it gets past this area, it'll convince me that it can go along. But yeah, so far, especially this week, it's been very, very difficult to get through. So on the flip side, if you're going to go short on it, it obviously needs to make a new low down below these levels. For mine, it's got a little bit of work to do to make it go short because it has to break down these moving averages that are going to prove pretty strong support as it does come down. So in that sense, the long is, it's trapped really. Look, at the end of the day, this one's trapped. The only way around this one is to scalp. So if you're going to go and scalp this down to the moving averages, which is probably the preferred trade, you can take it down to an hour, start looking for the smaller time frame changes of trend. We know that we can get down to that sort of 65, 50 area without a hell of a lot of trouble. So if we get a lower high and a lower low on, say, an hour chart, you can scalp it down and basically scalp it to the moving averages on the daily. That's where you're really looking. So you want to be going to around this level here. Okay, so that's a role reversal zone. You can see that it was resistance here, it was support here. That's the next place it will land, about that sort of 65-30 area, and that will coincide with the 20 moving average. So first point of call, that's the easier trade. That's the one that is more likely to happen just purely because there's less trouble in front of it. So definitely keep an eye on that one. Okay, we'll go to the US dollar CAD now. It's basically leveled out a little bit now. Like it had its breakdown earlier in the week. You can see that we had the big giant drop, the break of the triangle. So it was a really, really nice break of that zone. So we've seen the last the last couple of days have just been consolidating in this area. It's one of those ones where in an ideal world, it will come up and retest the break zone. That would be a really, really good trade to take because then, it's basically playing out the pattern as it should be played. But I'm not so sure it's going to have that strength to do it. It's going to rely a little bit on the US dollar strength, obviously, to get it back up there. It's just a case of a watch and see. I'm not really convinced either way on this one. The easier trade is probably to try and short it off the 20. If it hovers in this area long enough for the 20 to catch up, and then that starts to provide resistance for it, then you're more than likely going to see it just fall. It's not probably going to get up to this line here where the break is, the bottom of the triangle, that easily if the 20 does catch up. So the only way I can see it getting up here is if it turns around fairly quickly, breaks through before that's right in its face and picks up some momentum. But I would still be looking for a shorting opportunity in this area around the 138.70 area because it would be quite surprising. It would take some real momentum to push it past this level, seeing as though it was such strong support for so long. Okay, we can see here there's been support right through the whole pandemic, really right through March. So yeah, it's been very, very strong support. It's still looking quite bearish to me. Like the moving averages are about to cross, the 20 and the 50 are about to cross to the downside on a daily chart, which is obviously significant. And the other thing about this trade is there's just not a lot below it. I mean, you can get pretty low before it finds any real form of support. So The preferred trade would be to wait for the 20 pullback and then maybe short off it. But if it starts going before that and breaks through the 20 and gets up to this area here, then that would probably be the shorting zone. But it's looking pretty short. It would need a pretty significant close above this level to convince me otherwise. So yeah, one to watch on this one. But again, scalping opportunities. If you see it start to move on the 4 hour or even the 1 hour, you can see it's been very flatliney and really just basically supply and demand zone here. Really, like it's not really doing anything. Buyers and sellers are just altering their positions. If it picks up momentum and gets above these moving averages on the 1 hour, gets a series of higher highs and higher lows, we'll try and get it up to this level here, which is, it's about 100 pips away. So it's still a reasonable enough move, but you'd be definitely scalping it. But the preferred option is the short. All right, the US dollar Swissy is the next one we'll look at. Again, this one has been playing the game. We'll take it to a daily first. Hasn't really broken out of our channel yet, as you can see. Flatlining moving averages right in the middle. Yeah, not a real big surprise for this pair. It did it over here, as you can see. So it's basically doing the same thing as it was over in this level here. You can see the moving averages are flattening out. But, when it did eventually break down that support zone of that channel, it did go down and make a new channel. So it's not a big mover. Look, it's only going to move 100, 200 pips even on a really big move anyway, but you can still get your scalping opportunities in there. That's what I like about this one. This provides you probably 3 or 4 really good scalping opportunities every week, most recently, and they're fairly solid too. So you can see that it's at support now. You just take it down to the smaller time frames. And yeah, even though it looks really flat on the daily and not going anywhere, you can see that when you go back to an hour, you can see a double top there that played out quite nicely, straight down into support. Very easy trade, really. I mean, the target's the same place as the support line. And that's the beautiful thing about this trade. Like, it's really, really easy to predict where it's going to go. So keep an eye out for the scalping opportunities and just trade it in the channel until it proves us otherwise and actually breaks the support, or the least likely situation is it breaks the resistance, because it's got a lot of work to do before it gets up there. Okay, so the US dollar yen is the one we will look at next. This one looks like it really wants to, break up long. It's had a very, so it's a very steady week, really, but look at a lot of buying and selling, but prices not going anywhere. Look at the wicks on these candles. Like, I'll blow it up a little bit so you can see. And yeah, basically, it's just done a whole lot of nothing. It's tried to go up, it's tried to go down, but at the end of the day, it's got a whole heap of doji and very middle of the road open and closes for the last week and a half. So the one thing that I will say about this one is, though, it is trading above the moving averages now. So but both of them have caught up and they're both basically flatlining. They're not even really crossing. They're both flatlining at the moment. So. But what that will do is provide a pretty significant level of support at an area that's already a little bit, it's not a great area, but it's not the worst area you've ever seen for support. We know that the 107 sort of 50 area is pretty strong. So, for mine, it looks longer than it does short. And then you've also got the MACD about to cross the 0 line. So you can see it's well out of the histogram. So yeah, what that's telling us, pretty much what the moving averages are telling us here, that the 12 and the 26 are about to, go up above. So the 12 is about to cross the 26. And, that's reasonably significant. It's a flat market. So, we're going to take anything really to help it push it up. But the one thing we have got here is about 90 pips of very easy movement. There's not a lot of trouble in front of us for 90 pips, so it wouldn't be a big stretch to see it close. All we want is a close above these highs here. That's all we want. So to get that, we need to go to the smaller time frames, obviously. Probably an hour on this one is probably the best you're going to get. We want a series of lower highs and lower lows, higher highs and higher lows, sorry. We've already got the lower highs and lower lows, so it needs to break this cycle on the 1 hour. That could happen in a day fairly easily, so there's no big deal there. And if it does that for us, then it needs to close above these levels here, which is the same levels on the daily, and it's going to be about 40 or 50 fairly easy pips before it gets to the next resistance zone. So just one to keep an eye on that one. So the next one we'll have a look at is the ASX 200. Okay, this is starting to look a little bit more interesting now. It's had a really, really big week. You can see 3 really big long-range candles. Very, very powerful week. What it has done, it's certainly pulled up on this candle. Now, this is a really interesting one. We love shooting star candles, especially on a daily chart. The thing about this one is, though, it's not really at a level where you'd say, wow, that's amazing resistance. So the only issue for me on this one is that it's not really at a very strong resistance point. It's a really, really good shooting star. It's probably going to close like this now. Like we're at the end of the New York session, sorry, and the Asian session it'll be closed by the time it starts. So very high chance it's going to finish like this. I wish it was at a better area. If this was at a significant role reversal zone, that would be really, really good. But that said, it's still, it is fairly bearish candle, and it has had a big week. So it's probably more an exhaustion move than, a really sign of turning around. But that said, we rely on the US. The US we know is at resistance. So, it's one of those ones where if the US goes down, this will go down with it and this candle will look amazing. But I'm not totally convinced on it, even though it looks like a really, really good shooting star. And this is my point, and we say this a lot in the webinars. It's more important when these sort of candles are at a really significant area. This one isn't that significant an area. It's all right, but it's not fantastic. So it's more, and you can see here on the daily, like when there's nothing, there's just blue sky, right around it. So what we want to be doing here is just probably playing this a little bit cautiously, keeping an eye on the US to see what it's doing. And if the US starts to look short, this is going to short off fairly heavily from this area. So not a lot of trading opportunities on this one that I can see that would be solid. All right, the last one I will look at is the Euro USD. And we'll actually revert back to the dollar index on this one as well, just to give us a little bit of a clue as to what may be happening now. Hopefully a lot of people got in on this trade here when it did break the 200. We were talking about it yesterday in the question and answer. And for those of you even at the webinar, we knew this zone was a fairly important one. So hopefully people were watching it. It's a pretty strong area for the euro. Like even though now it's gone up and it's tested the it got all the way up to the 110, 90 I think it was at its high, which is a pretty reasonable move. A good bust of the 200. What we're probably going to see now is, a bit of a retrace back to this area again, and it wouldn't be a bad thing either. I don't think it needs to go shooting the lights out any higher. I think it'd be pretty good if it actually came back and retested this zone for us, and then probably look for the long opportunities. But look, there's no question it's broken this channel now, and a significant break, which is what you want to see. So hopefully it'll come back and retest this 200 from above, and that would give us a really good landing zone. What we'll do, we'll cross-reference that with the dollar index, which, it finds itself, funny enough, at a pretty strong support zone. You can see it's broken down. There's no question about that. It's at a support zone now, at a role reversal as well. Okay, so you can see the support and resistance playing out. It's at the all-important 200 as well. So, more than likely what will probably happen in this regard. This still looks short. So, I mean, I'm not convinced this is not going to go any shorter. All I'm thinking it's going to do is probably retrace up a little bit, and that'll give the euro a chance to reload and come back as well. So what you will find will happen if the euro does come back to the 200 before it relaunches, this one's going to retrace back up to the 20 and the 50, and back to this little zone that it actually broke. So ideally around that sort of 199 area, it will pull back to, and then reload and probably short off that area, which will be a fantastic result, because if it does that for us, it will be playing in our hands with the euro. I'll just draw that line to make it really clear. Okay, so this is the area that we want it to come back to. So you can see that we've got resistance here. We've got a series of support levels here. There, what we want to do is see this one come back and retest this from the bottom, which will bring the euro back to the 200, which is what we want. And then, this one will look very short from there, and the euro will look very, very long from there as well. It'll be a great pullback, actually. And you can see the MACD's gone negative now. So, and you're also getting a 2050 cross. So it's looking very bearish, this one now. So definitely one to watch. We'll keep an eye on those two moves. If you want to scalp, you have to go to the smaller time frames and look for the opportunities to get them to the levels that we've talked about on the bigger time frames. All right, so I hope everybody's had a fantastic week's trading. We've had some really, really good moves. Hopefully you've got plenty of pips out of them, and it looks like the markets are starting to move in the directions that we need them to make some good money. So have a great weekend, everyone, and I look forward to seeing you all next week.